Hi guys, Emmanuel right here. Welcome to this section of our YouTube educational content. So today we're going to be doing a Q&A. I'm going to be answering some questions around trading and basically these questions came in from a poll we ran and I got some interesting question that we want to talk about. All right, so the first question we're having here is I'm $1,500 down from my 25K consummate. I don't know what to do. It's making me feel down for 2 days. Now, so should I leave trading for a while or what should I do? Okay, so basically, for what I'm getting in this question, he's currently on a drawdown and it's best you just stay away from trading for a bit. Try and clear your mind, do some other activities outside of trading. If you're into video games, play some video games, link up with your friends, brush up everything and fully recharge so that you can come back with a clear sense of mind and a clear sense of judgment is very important because by the time you start taking trades again this time around you would need twice the energy that is required to grow an account versus recovering an account. So this time around, you need to be on your A game. You need to be on your 100 to be able to do that. It's not going to be easy, but then this will help you to be able to attempt to recovering that your trading account, and that is where stuff like having your A plus setup comes in. You need to be very patient this time around with your trading. Allow your A plus setup to show up. Setups that gives you an 80% chance of winning and all that, so that you can continue your trading and restore your trading account. All right. So on to the next question. So this one goes like this. Sir, I want to know the right time to exit a trade when it's not going as expected, e.g., if I'm executed on a trade on 1 hour time frame and it's not going in your expected trend, what's the right time to exit that trade? All right, so before you even place a trade, you need to have thoroughly analyzed, do your top down analysis. Now, on the channel, we do top down analysis all the time. Each time we do a market forecast, we do a top down analysis. Now, top down analysis is basically, working your way through from higher time frame to lower time frames. We're looking at time frames like your daily, your weekly, before you get down to the hourly time frame, right? The 4 hour, then your 1 hour. Now, if you look at the market from this angle, from a higher time frame, what it does is it positions you to see where the volume is being, you know, targeted towards. If we're looking to build a volume to trade to the upside or to the downside, you get to see that from the higher time frame. And when you've clearly, identified the directional move, the next thing you want to do is scale down to lower time frames to look for entries that are in line with what we're looking at for the higher time frames. This will, give you a better trade setup and entries versus if you just look at your trade on a 1 hour time frame all the time. The 1 hour time frame also has its own short-term directional move, but the major thing here is the high time frame will give you a longer term directional move. So you need to know how to filter in between these two scenarios: short-term moves and longer-term moves. Okay, so on to the next question now. The next question says, please, how did you manage your psychology? Okay, so psychology is a very broad topic on its own. It's something that is really, really broad and interesting. So, one of the ways that can help you to manage your psychology is having your trading plan, right? Now, your trading plan is supposed to contain, what you're looking at in the markets, what is like your preferred build up in the market for you to consider taking a trade. What's on your checklist? Are you the type that trades like a breakout? Do you trade a ranging market? Do you trade a trending market? Now, First things first, if the market doesn't fulfill your trading conditions, that should keep you out of the market automatically. Okay, that is like your first step that will help you to stay away from risk managing a trade. Very, very important. Now, if let's say your trading plan now, goes as expected, and we're looking at, you being inside the trade, one other thing you want to do is knowing your risk to reward ratio. Now, with your risk to reward ratio clearly defined, you know that okay, this trade you're taking, there is a 80% chance you get your risk to reward as maybe let's say 1:3 or 1:2. Now, with all of this in place, of course, you always want to have your stop loss. Now, your stops is supposed to protect your trading accounts from being blown and many other things that could happen. We're trading a forex market that is dynamic, and you need to be very active and monitor your trades and manage and all that. So these are some things that will help you with your psychology. Now, being able to stick to your trading plan for a good amount of time. We are humans, we can't always stick to our trading plan 100%, but then if we can do this, let's say about on a scale of 1 to 10, 7 or 6, that alone will help with your psychology. You'll be able to be in the heat of the moment, see your trades run from profits, from your entry to profits, and also being able to also see your trades run if it's like likely going to hit your stops, to be able to manage it and mitigate your loss. So, and there are also books you can read on trading psychology. I think I will link a few on the description. You read on those books, and they also help you to fine tune how you manage your psychology while in a live trading position is very important. Then one last thing I want to talk about is your journaling. Journaling also help with your psychology. So think of journaling as you recording your behavior in the market. What is your behavior like when you're winning a trade? What is your behavior like when you're in a losing trade? What is your behavior like when you're out of the market or when you've missed a trade? Those things are data that tells you more about yourself, that when you go through them, it will help you to make better decisions. You have that skin in the game, and you get to understand yourselves as well. That's very important. Okay, so on to the next question. um this question goes like this: as a beginner trader that wants to extend his knowledge, what will him or her do in case she don't have a mentor or he doesn't have a mentor? Okay, so um mentoring is something that also take you far when it comes to trading and any other thing at all, any other discipline at all. Okay, so what you want to do is you want to do your research and find out who is trading the kind of way you want to trade. Very important. Who is managing his life around trading the way you perceive it to be very okay with you. Also want to take a look at how that person goes about the trading in general, taking trades, holding trades, the mindset around his trading and all. If you're a kind of person that likes flipping of accounts, you go and look for those people who are very good in flipping accounts. Use that person as your mentor. Why? Because that person is going to show you things around flipping accounts, the real side around flipping accounts, the downside about flipping accounts and all that. If you're somebody who likes to day trade, like me, I like day trading, you want to also look for somebody who day trades the manner you want to, or the way that is very easy for you to pick up. Very important. If it's swing trading, you do the same. Now, outside of trading style or methodology or concept, you also want to look at the mindset, the psychology. How does that person think is very important. If this person is the kind of person that is very reserved, is very chilled, it doesn't gets into like that mindset of forcing things and all that. If that resonates with you, those are the kind of things you look out for before you pick a mentor. It's very important. So I hope I've answered this question very well, and Now, the next question goes like this. I think this person asked a question earlier we've answered. It says, still me on the greed issue. Ever since losing my live prop account, I've been struggling to pass another account, gotten tons of accounts. At some point, I gave up and started funding my little capital to trade directly with my broker. I gambled it on trades, not my setup, ending me in more depth now. Okay, that's sad. Okay, so if you're this person, listen closely. This is my own take on this. So when it comes to the issue of greed and also struggling with prop accounts, now the first things first is before you take on a prop account or prop trading, you should have built that habit and that skin in the game of being able to identify what you understand, what you can trade comfortably, and a very particular trading account. Now, there's demo which you can use that to practice for some time, but not to dwell so much on that. Or you can even go an extra mile of doing a free trial. Now, the free trial has all of the characteristics and all of the components of when you're trading, your actual proper accounts, with all of the trading days, minimum drawdown, and all of those things inside. So what you want to do is you take a 5k or 10k account, for example. You know that this is the account you'll be getting when you go fully on the prop. So what is going to do is going to help you build a mind frame around that account. You'll be able to know, okay, this is my threshold for loss in a day. This is my threshold for the like cumulative loss. This is my threshold if I'm in a huge winning trade, if I'm in a huge drawdown, or if the market is not picking up. So all of these different phases of handling an account, you see all through them. So by the time you take up the prop account itself, you'll be, you know, on point. You would have, normalized all of these things. Okay. Now you might not get it right on your first trial, but on your second trial, so you get a hang of it. Very important. Now, on the other hand, while trading a proper account, the goal there is to be able to build up capital that you can use to trade your personal accounts, right? So after passing your phase one, your phase two, getting funded, and all of that, which by the way, we're working on a series where I'm going to share my experience trading a funded account, a 100k funded account. I'm going to walk you guys through the highs, the lows, and everything in between. So keep your eye peeled for that. The video is something we're working on, and it will soon be posted as well. So yeah, trading a funded account is different from when you're trading during the evaluation phase. Is very, very different. Okay, so the end goal here is to be able to always liquidate profits on a monthly basis. Very important. Now this profit is the money you're going to use to fund your live account. Now while trading a live account is also totally different from trading a prop account. A live account gives you a much more flexible approach, which you can set any kind of rule you want to use to manage that live account outside of what prop firms does. However, have in mind that prop firms helps us to be very keen on risk management. That's the major edge with prop firms. Okay, so these are the things that will help you, and try as much as possible to stay away from debt. You don't want to be trading with so much pressure on you. Hitting the target is already a pressure on you. Now borrowing money to now take a proper account and trying to hit targets is twice as I don't know. That's too much. That's unnecessary. All right. So um, now on to the last question, guys. And the last question here, it says, I was the same person on the greed issue. I've tried stopping. I do for a couple of time before I know a little pressure or big trades, and I'm already finding myself setting entries on what I'm not seeing while blowing lots. Okay. Uh, I don't know. There's some. Okay. Let's just go through this one. So, like I said earlier, being able to know your setups, being able to do your top down analysis, and also being able to know the market condition that goes well with how you trade is very important. So if you've done this for some time, you would have normalized how to handle certain market condition. Now the key problem here is staying away from the charts when those market conditions are not there or when they are not met. You need to be able to do that, and that's where discipline comes in. Nobody is going to directly teach you discipline. You have to observe what you do and know what works and what doesn't work. Where that's where journaling comes in as well. So, and one more thing here is when it comes to mistrades has to do with were you out of the market when that trade materialized and you were unable to catch that trade? Was it as a result of something you can control, or was it something that you couldn't control? Was it a day that you had a lot going on with you outside of trading and you missed that trade, or was it just out of a little bit of carelessness or anything like that? You need to be able to know what was the reason why you missed that trade. It's very important. So, however, you can also build the habit of setting alerts, knowing when the market is, likely going to produce your setup. Is it London session? Is it New York session? Is it London market open? Is it around the time when London and New York is, at its peak or anything like that? You need enough information to work with basically. Now, this will help you to be able to position yourself and not miss trades. For me, there are times when London breakout is like what is, the major for me for some time. After some time, my shift to trading New York session and all that. But then I usually follow my charts in a holistic way. I've built a system that helps me to be able to easily look at the chart and know if I'm trading that day or not. So that could work differently for you. And basically, you need to be able to journal and know what works for you. Very important. All right, guys. If you find this video very interesting and the content very educational, drop a comment, like our content, so that the algorithm will recognize our channel and will grow our YouTube channel, and we'll also keep posting contents like this. Okay. um, until next time, see you guys. Peace.